The dividend kings and aristocrats are not the only ones with long track records of paying and increasing their dividend every single year. Just like the aristocrats, the so-called dividend champions have done so for the last 25 years. The only difference is that the champions, like the kings, don't have to be in the S&P 500. So while there are currently only 66 aristocrats, there are 129 champions. Let's briefly explore the top 13 dividend champions with the highest dividend yields. The idea here is just to give you a jumping off point for your own research. If any of these stand out to you as worthy of a deeper dive, I hope you'll be able to use some of the other resources I've created in the past and will continue to create in the future to help you with that process. Now, if you appreciate these videos, please take a second to hit the like button so that it can spread to more people. Thank you. And one last housekeeping item, I am a licensed financial advisor, and this is absolutely not financial advice. I don't know your personal situation, so I'm obviously not attempting to advise you to invest in any of the following stocks. For the full list of my disclaimers and disclosures, check out the link at the bottom of the description below. All right, let's get into it. The 13th highest yielding dividend champion is United Bankshares, Inc., ticker UBSI. It's a $4.5 billion company as measured by market capitalization, operating in the financial services sector. They operate a traditional banking model employing more than 3,000 people spread across 230 offices in 8 states plus DC. Nothing in particular stands out in their financials other than their not very promising expectations for future growth. For a bank, they have a pretty healthy balance sheet. Their trailing price to earnings ratio, a way of gauging the relative valuation of a stock's price by telling us how much per dollar of profit we have to pay to own a piece of the company, otherwise known as the PE ratio. It's currently at 11.8. For context, for all of these stocks, the average PE of US stocks right now is 16.1. But the average for the financial services industry right now is closer to 11. Their payout ratio, a quick way to gauge a company's ability to keep paying its dividend and how much they prioritize dividend payouts over reinvestment into the company, one of the 11 must-ask questions before buying any dividend stock that I outline in this PDF that I'll link out to in the description. Their payout ratio is 46.5%. United's 5-year dividend growth rate is relatively low, as are most on this list, except for one that's pretty high on our list, which is interesting. Anyway, United's is only 1.8%. They do boast 46 years of consecutive annual dividend increases, so it's not going to be too long before they qualify for that exclusive Dividend Kings list. Coming in at number 12 on our list of highest yielding dividend champions is Northwest Natural Holding Company from the utility sector, ticker NWN. Now, we covered this one in a recent video where I touched on all 36 Dividend Kings, which I will link out to directly at the end of this video in case you're hungry for more ideas. But for now, to spare regular viewers the redundancy, I'll just throw up on the screen all the basics we hit on over there. I will go ahead and point out their 4.1% dividend yield though. Now, this is a company that's been around for a long time. They were founded in 1859 and currently employ about 1,200 people. It currently serves about 2.5 million natural gas customers. NWN's price to earnings to growth, or PEG ratio, is rather high at 3.1. This is a valuation metric popularized by famous mutual fund manager Peter Lynch, designed to compare not only the stock's price to the company's current earnings, but also to its future growth. A number above 1 is generally thought to be overvalued. A couple additional considerations for you to keep in mind if you pursue this one further. Their debt is not particularly well covered by operating cash flow, and the debt has been growing despite, as we already touched on, muted expectations for future growth. Also, there's been a decent amount of insider selling over the last year. Not necessarily a bad indicator, but something to keep an eye on. It's always better to see insiders buying. All right, the 11th highest yielding dividend champion is Chevron, ticker CVX. Employing almost 48,000 people, this is the second largest company on our list today with a market share of $261 billion. It's obviously in the energy sector. Our largest company is also in this sector. I bet you can guess who it is. We'll see if you're right here in just a second. Now, Chevron's stock currently yields 4.2%. It's increased its dividend for the last 35 consecutive years. The growth rate of those increases over the last 5 years has been 4.4%. Its trailing PE is 26.3, and its current payout ratio is just over 100%. And that's not even close to the worst payout ratio on this list. Now, energy stocks have been on a tear recently, this one up over 50% over the last year, and if inflation concerns and the current flight to safety of value stocks, as we discussed in this video, keep up, that trend could absolutely continue. Now, Chevron's PEG ratio is 14.2, but they do have a pretty healthy balance sheet. Their debt is well covered by cash flow, and interest payments are well covered by earnings before interest and taxes, or EBIT. Next up, number 10 on our list is Realty Income Corp, a REIT, obviously in the real estate sector, with the ticker symbol O. They have a market cap of $27.4 billion. Their dividend yield is currently 4.4%, and they have a history of 26 consecutive annual increases. Over the last 5 years, those increases have averaged just 1.1%. Their trailing PE is a concerning 57.9, the worst on our shortlist here. And their current payout ratio is 219.9%, also the worst on this list. Now, Realty Income is expecting relatively high earnings growth over the next few years, far higher than the market or its industry, which may bring some of its struggling coverage ratios back into more acceptable ranges. One fun thing to keep in mind about Realty Income is that they're one of the few companies who pays out a monthly, not quarterly dividend. All right, moving on. The 9th highest yielding dividend champion is Leggett & Platt, ticker LEG, with a current dividend yield of 4.4%. Another one of those dividend kings that you'll be able to brush up on when you check out this video that I'll link out to at the end of this one. Now, here are the basics that we talked about in that video. Leggett currently boasts more than 20,000 employees who are designing, manufacturing, and marketing engineering components and products around the world. The company has a relatively high level of debt, which is currently not well covered by their operating cash flow, but their interest payments, at least, are pretty well covered by their EBIT. Next on the list, at number 8, ExxonMobil. Another one from the energy sector, this one employing about 72,000 people, ticker XOM. This is the largest company on our list here today, with a market capitalization of $318 billion. Currently yielding 4.7%, Exxon has increased its dividend for 39 consecutive years at a growth rate over the last 5 years at least of 3.2%. It lost money last year, despite its $242 billion in revenue. So I can't really calculate a PE ratio for you. That also makes the payout ratio tricky because, well, it paid a dividend while loss-making. Now, obviously, they're projecting making money into the future, so you really should dive in there to understand the full narrative before investing here. The stock is up more than 60% over the last year due to the same reasons I mentioned for its energy companion Chevron. And for now, at least, the company's debts and interest payments are relatively well covered, so you don't have any immediate concerns from there. And although more insider selling has taken place over the last 3 months than buying, there has been some buying, including from the CEO, which is nice to see. All right, next up, the 7th highest yielding dividend champion, Mercury General Corporation, ticker MCY. They're in the financial services sector with a $3 billion market capitalization. They have a 4.7% dividend yield with 33 consecutive annual increases. The 5-year dividend growth, however, has been a meager 0.4%, the lowest on this list. Their trailing PE is only 7.8, and their payout ratio is only 35.9%. Both of those also the lowest on this list. Mercury is in the auto insurance business with about 4,300 employees. Now, they're another of these companies with low future earnings expectations. They're expecting declines in the near future, so watch out for that. But they do have a pretty healthy balance sheet on the whole. Number 6 on our list is International Business Machines Corporation, or ticker IBM. The only one here from the technology sector. They've been having a tough time of late, for a long time really, but that hasn't stopped them from paying and increasing their dividend, at least not yet. Their yield is currently at 5% with 26 years of increases. The 5-year dividend growth has been 3.2%. IBM currently has a trailing PE of 24.9 and a payout ratio of 127.3%. Their market cap is $118.8 billion, and they employ more than 345,000 people. Now, IBM has a lot of debt. Their net debt to equity ratio which is their total debt minus cash and equivalents divided by its total shareholders' equity, that's more than 230%, when really anything over 40% should warrant an investor's attention. All right, let's keep moving. The fifth highest dividend yielding champion, Universal Health Realty Income Trust, another REIT, so real estate sector, ticker UHT. Now this one is the smallest company on our list with a market capitalization of only $780 million. The REIT is currently yielding 5% and boasts 37 annual increases. The growth rate of those increases over the last 5 years has only been 1.5%. Their trailing PE is 34.5, and their payout ratio is 167.8%. Now, they do have quite a bit of debt, to be expected for a REIT, but worth keeping an eye on. Their net debt to equity ratio that we just talked about, for example, is about 214% right now. Okay, number 4 on our list is another REIT, National Retail Properties, ticker NNN. They focus on investing in high-quality retail properties that are generally subject to long-term net leases. They own more than 3,000 of those properties spanning 48 states. Those properties boast a weighted average remaining lease term of 10.7 years. National Retail Properties currently has a market cap of $7.4 billion and a dividend yield of 5%. They just had their 32nd annual dividend increase, bringing their 5-year dividend growth rate to 3.1%. Their trailing PE is 29.1 and payout ratio is 105%. Next up, the third highest yielding dividend champion, another one we covered on our Kings list, Universal Corporation, ticker UVV. They're boasting a 5.7% yield and 50 years of consecutive increases. And here's the rest of the information that we covered in a previous video. Universal, with their 9,000 employees, processes and supplies plant-based ingredients around the world. They have undergone some pretty significant downsizing over the last couple of years, and there has been some insider selling over the last year. But overall, the company and dividend appear to be relatively healthy. But remember, this is a small cap company, so be careful and be prepared for potential higher than large cap volatility. And now, number 2, the second highest yielding dividend champion, Enbridge Incorporated, ticker ENB. Enbridge operates in the energy sector and has a market cap of $83.5 billion. It's actually a Canadian energy company with more than 11,000 employees. Its current dividend yield is 6.5% and boasts 26 years of consecutive increases. In fact, the growth over the last 5 years is the highest on this list, averaging 13.4%. Its trailing PE is 18.3 and its payout ratio is 130.7%. Keep an eye on their future earnings because right now they're not forecast to be enough to cover their current dividend, let alone any future increases. Finally, number 1, the highest yielding dividend champion in the world. It was the highest on our Dividend Kings list as well. It's the tobacco giant with its 7,000 employees, Altria, ticker MO. Here's the information that we covered about them last time. Their dividend is still yielding 7.1%. Their earnings have suffered quite a bit recently, which has led to a rather high PE ratio, but they are projecting decent growth over the coming years. Keep an eye on their balance sheet as well. They've been ramping up their debt recently to the point that their shareholders' equity is now negative. That being said, the cash flow, at least for now, is enough to cover their debt service obligations. There you go. All 13 dividend champions currently yielding 4% or more. Which is your favorite from the list? If enough of you let me know in the comments, we might take the time to do a deeper dive analysis video into one of them in the future. And if you like considering long-term dividend players for your portfolio, then you should definitely click on this video next, where I outline all 36 of the current Dividend Kings, those stocks with a 50 consecutive year track record of dividend increases. I sincerely hope these help you on your way, and I wish you all the best. Take care.